Hey, it's Wade with Trade ATS. Happy Monday again. So this week I got another 3 picks that we're going to be going over with you. If you check out last week's video, I had 3 picks. One went sideways, the second one paid decently, but it's not done yet, and one completely fulfilled. So I would encourage you, when you're done watching this video, go back and watch that video because there actually may still be some opportunity in those pairs. I think that they're still set up to some degree. So that being said, let's get into this week's picks. All right, so the first pair we're going to be looking at is none other than AUDNZD. You can see that I got my 30-minute chart right here on the right side, and I got my daily chart over here on the left side. So let's start over on the daily time frame, see what's going on. So you can see that these candles have started working their way down here. We're also pulling away from this previous value level here. So as long as we hold under that, it's a potential momentum situation. That means the higher time frames can kick in and really carry some massive trends to the short side. It's not guaranteed to happen, but it is a possibility. So we'd be looking for that to kick in. But without that, what's the minor opportunity here? So if we look at these candles here, you can see that the last day has kind of pushed up and broke the highs of these previous candles. This could be a trap to get traders sucked in on the long side. Now it also could be a reversal. I'm not ruling that out, but this is where the opportunity lies, is when we see that other people are getting sucked in to what they think is a trend rotation potentially. And again, they might be right. But when that happens, that's typically where you get the best discounted opportunities to enter. So where are those opportunities? We look over here on the 30-minute. There's 2 different predominant levels that I'm looking for. Now, if we think that the trend is going to go down, we want to sell overvalued on the lower time frame. So where's value? Value is these 2 levels right here. This is what's been established. How do we know it's been established? It's because we had a contraction, we had an agreement in supply and demand created right here, and now we are getting these expansion legs. You see we have 1, 2, 3, 4. We have all these legs that are funneling out around that central point of gravity, and that shows us that the market makers are very interested in that level. It is a balance in their book of business, so we want to see how the market pivots around that specific level more importantly than any others. So we also do have what we call major framework back here as well, and that is also part of this expansion phase. So we're looking at both those levels collectively, but ultimately this one, especially because it's the lowest inside this trend on the daily right here. So entry and expectation. Not telling you guys what to do, always trade your own trade, but here's how I would approach this, and I just may. So if we look up right here, I see that we took out liquidity right here, also right here. Okay, when we took out this liquidity right here, we got a rejection off of that. I see that it's under this framework over here. So I'm looking at this point right here as a potential rotation. Now, why would I do that? Why would I not be saying, let's trade this up? Well, because right here, everybody that has sold this market from back here, all of them, they've been in the money, and traders, the reason why they lose is because they always overstay their welcome. Everyone knows potentially when to get in the market, but they never know the right way to get out for risk or for profit. So we see that all these traders, especially the ones that chase this spike down here, remember, they're not looking at the framework, they're not looking at order block projections, they're not looking with a sophisticated view to where things are likely to push. They jumped this trade, and then it took them out of the money, and it's been going sideways. They've been waiting. They thought, right here, I'm finally going to get paid, and it runs all the way back to their origin, their belief origin point, which is going to be back here on this push, and they put their stop loss above this high. Think about it from this perspective. If you shorted the market right here, and it puts you in the money, you'd feel okay right through here, and you're just waiting for that massive trend to break out, but then it ultimately starts creeping back against you. By the time, if you sold right here and price is right here, a lot of times you're going to say, forget it, not worth it. And you saw a big profit, but guess what? It was on paper. You never got to keep it. That's the way the market goes around. We want to look for those pain spots. That's why this is called action threshold software. You can map this on your own charts too. You could find these spots. I teach that in all my other videos. But with action threshold software, we want to look for those points where we know people are going to be put in pain, because those are the real turning points of the market. That's where we get the best deal with the lowest risk, highest reward. So if that was a rotation, obviously the best entry would have been on liquidity right there. So this could already be underway potentially, okay? Where do we think it's gonna go? Well, we're gonna look at the swing low point of the cycle. This is the cycle I'm going off of. We have leg 1, leg 2, leg 3, leg 4. We're on leg 5, so we'd be looking to go through and make leg 6. that's going to happen right here at this patch of liquidity, right at this low. So I'm looking at this cycle back here. I'm looking at these the multi-leg expansion, 1, 2, 3, 4, 5. We're on the 5th leg. My expectation would that we would not only get back to the central value point, which is right here, which is about 26 pips away, not a huge amount, but it's decent. But also to work our way through the swing low liquidity point, which is right here at the bottom of the cycle. So we are staying connected to what started back here. We want to get from here down to here first. And then when we get to here, we want to get through there through liquidity. And then ultimately we can work our way down to these order block projection levels right here. So if we go to this order block projection, if we really knock it out of the park, that's about 73 pips. And now as far as downside, where would I say forget it? I'm totally wrong. I would be looking above either this level right here or this order block projection on the upside. I really don't want to make it through any more of this framework to the upside. So as of right now, the overall risk reward, let's call it, about 40 pips. Worst case scenario, I'm not saying you need to ride it that far. You could get clues to get out before that, but that's if the market spiked against you and totally didn't go the way we would like it to go, which could happen. That would be the point of no go at that, and I would just get out. But the upside, again, down to this order block projection, we have that. We also have liquidity down here, and then also the swing low point right here. We have about 44 pips to the swing low, which... yeah, so it's about 1-to-1 risk to reward if we just get to the swing low point. But if we break that with any level of intensity, you could head down to these order block projections and this lower liquidity, and then it starts to become pretty nice. So we're going to want to watch for that progression and see what happens. Let's go to the next pair. And my second one I'm looking at is CAD yen. Same setup, 30-minute chart over here, daily chart over here. Now the idea on this one is to go short with this daily situation right here. We see we had one daily close short. This one has broke up above, come into the highs of these previous candles over here. So what I'm expecting is kind of similar to the last one, that this potentially is a false breakout and that there could be some money to be made coming back into the range of this candle. I'm not just going to look at those candles. I'm going to define the framework on the lower time frame to see what are the exact prices I'd be looking to manage that by. So if we go over here, you can see that we have an expansion level right here. This is really the line that I would be using to calculate all my risk to reward initially from. This is a predominant value level that is in here. We see that it's a red box, which means it's more significant. That's why we have the expansion line right here, that value level coming out of that contraction zone. So we are above this value as well. So what I don't want to see is I don't want to see price hold much above this value. I want to see overall over the next day or so that we get rejected above that price level. And if we do, chances are we could come back to this center of gravity, which is about 60, 70 pips away right now. Now, that would be the first benchmark price to get to. The next one from that would be swing low liquidity on the current cycle, which is down here. We have this liquidity line right here. Also another one right below it from a previous cycle. That is about 90 some pips away. So this could potentially be somewhere between a 60 and 100 pip opportunity, simply just coming back into the range. But again, we got to have a directional bias. My directional bias is all based on the daily holding these candles short and coming back into that range. Where I would say that it's a no-go anymore, I really don't want to see it trade through liquidity right here with very much intensity. So initially stop loss would probably go somewhere in this range, would have to see. And you know, I definitely, that would be my worst case. I would not want to wait till it hit that. That's just where I would stick it if you got in the trade, just be up in this general area, just in case some big spike happens in the market, something that's unforeseen, want to be protected, but that's where it initially go. But I really want to see it not have much interest, preferably above this level, but for sure not above this liquidity. That would be kind of the last one I'd like. If we did take it out, just take out that liquidity a little bit and then come back down and work our way back down to this point of value. So we'll see how that works out. Not the greatest opportunity. There wasn't really too many awesome opportunities this week, but this is at least something to talk about, something to keep your eye on, and if anything, you learn from it. So we'll see how this one goes, and let's go to the next one. All right, and the last one I got for you is none other than EURUSD. I did touch on this one last week. As I mentioned at the beginning of the video, I still think this one's on its way to fulfilling, so we're gonna still keep working this and watching this. Another reason I include this one is because a lot of our user base, people that are in ATS, trade EURUSD, from 5-minute traders to 30-minute to 4-hour to daily, you name it. A lot of our traders look at EURUSD. So I'm gonna just cover it. This one's for you guys. So right now we are still above this value. I'm looking at this one. We also have this one right here that we keep touching above. See right here, keep getting rejected. So between these two values, ideally trade placement above this value would be nice, but the fact that we're still above this one is still decent trade placement as well. So, and this really is the level that we wanna work through on our way to the ultimate fulfillment. Now the ultimate fulfillment that I mentioned last week was getting through the lows over here on the daily. And that's just kind of the initial place. I think if we do hit those lows, we could get a big breakout still to the short side and see a decent trend through that. So that's kind of where I'm ultimately shooting, and then we'll see what happens. But our minor fulfillment would be just coming back to this value. So from where we're at, it's about 27 or so pips, not a huge amount. But it's decent, just coming back to there. We want to also get to the cycle low from the cycle back here. That's this low right here. And then this liquidity line right here, we pop on our sync crosshair. You can see that that is also the same level as the one on the daily over here based on that liquidity line. So yeah, I think that that would be a great place to aim for. This particular one is going to be about, it's about 56 pips away or so, somewhere in there, 55 to 60. And then if we do nail through that, like we just blast through that level, let's say, then I'd aim for this order block projection down here, which is about 85, 90 pips away from where we're at right now. Now, if this doesn't work out, I'm looking at this liquidity line right here above this high. I do not want to see any kind of heavy breakout up through that level. That's a place where I'd be like, okay, maybe not. We're going to give it some more time. Yeah, I think there's a good chance that we could still work our way down and be looking at those benchmark prices. All right, so that's what I got for you guys this week. Remember, if you like content like this, you want to hear from us each and every week with these picks, remember to like and subscribe. Until next week, trade safe. Make sure you trade your own plan. Go out and crush it.